Well, the much anticipated Federal Reserve rate cut has come and gone. So, for everybody who is looking to lock in an interest rate, whether they're purchasing a home or refinancing, what to do now? To help illustrate that, I just want to show you this chart of 30-year fixed rates. This is kind of an average of 30-year fixed rates over the last year, basically going back to October of 2023. And what you can see here, if you look in the upper left corner, is you see the average rate was about 7.79, 7.8% back in October a year ago. And since then, the rates started traveling down. They got down as low as the mid 6% range at the end of the year, and it looked like they were going to keep going that direction. But then inflation reared its ugly head and the rate started heading back up again, hit a peak around May when they got back into the low 7% range. All the while, no Fed rate cut. Well, since then, of course, the rates then started trending back down. 30-year rates coming down to the 6.86% range, and then in 6.73 in August, got down to 6.47 in the middle of August, then 6.35 at September. All the while, still not a single Fed rate cut. But then on September 18th, we got our 50% rate cut. Now keep in mind, the interest rates on mortgages had already fallen by about 175 basis points, basically about 1.75%. Huge drop without a single Fed rate cut. And the reason is because the mortgage market, the bond market, knew that at some point the Federal Reserve was going to have to reduce the rates, and it was looking at the data and anticipating that. So the rates had been coming down in anticipation of this Fed rate cut. So in other words, mortgage rates are not determined directly by the Fed funds rate. What the Fed funds rate does is it determines the amount, the rate that banks lend each other overnight. So mortgage rates actually precede the movement in the Fed funds rate. So when rates are coming down, the mortgage rates start coming down first ahead of the Fed. When rates start going up, mortgage rates start going up ahead of the Fed because the Federal Reserve is slow to react. And so what we've seen now is basically the Fed has finally caught up, acknowledged all this data over the last year, and we have our 50% basis cut. So now to try to help answer the question, what should people do right now who are trying to lock either for a purchase or a refinance, what should they do? I want to share this other chart with you, and it's a chart of mortgage-backed securities. And basically what this does is it shows the price of mortgage-backed securities. And just to keep things really simple, when we have green candlestick patterns going in an upward direction, that means rates are coming down. So let's just say green is good and red is bad. Red is when the mortgage bonds start to sell off and we have upward pressure on rates. And the main thing that I want to bring everyone's attention to is just these last few days after this Federal Reserve rate cut. So you can see we've had a pretty consistent improvement in the rates over the last month, but especially in the last 10 days. And then over the last 3 days, since this Fed rate cut, it's kind of flatlined. You can see it starting to move laterally. In other words, the juice has been squeezed, at least for now, as regarding the Fed rate cut. So there's a little bit of indecision here. We had a couple of bad days. Even the day that the Fed cut the rates, actually, we had sort of a bad day in the bond market. Then good, then bad. So a little bit of indecision right now in the bond market. So for people who are purchasing and they've got something coming up soon to close, I would say within the next 2 to 3 weeks, I would look really closely at locking in an interest rate. Also for people who are refinancing, I would lock. If you have a longer time horizon, then maybe you could stand afloat a little bit. But what we don't want to see happen is in this time of indecision, perhaps see the rates drift down, not the rates, but the prices drift down and the rates drift up, because we've seen this great run up and now we just don't want the market here to lose steam, because it's not necessarily a linear line. Rates don't just go straight down and they don't just go straight up. Sometimes it's one step forward, 2 steps back. So for now, I would say if you have a purchase or refinance to close within the next 2 to 3 weeks, probably a good idea to lock the rate. If you're longer time horizon, then you can wait and see if maybe we get some improvement down the road. Hope that helps.